Ladies and gentlemen, 2025 is going to be biblical. Over the past 72 hours, we have bad news after bad news. Things are escalating very, very quickly. So in today's video, I'm going to be going over all the big stories that have happened over the past 74 hours, how it's going to affect you, how it's going to affect me, how it's going to affect the markets, and how we can prepare and position ourselves to protect our wealth against the situations that are going to be coming, and also make wealth from the opportunities that are going to be coming. Because I don't know if you saw what happened in the markets last week, but we saw markets tumble. We saw the dollar surge. We're seeing currencies around the world crash. We're seeing foreign debt crises. We're seeing massive escalations with what's going on with China. I have some new crazy stories or some announcements that came out of China to tell you that's very, very important. And we're also seeing the catastrophic wildfires that's happening in California that's going to have hundreds and billions of dollars worth of damages and could bankrupt some US insurance companies, which no sympathy for them, but it's going to lead to more domino effects throughout the whole US economy. So everyone, I've got a lot to cover in today's video, and you're definitely going to want to watch to the end because I'll also show you an opportunity of a stock that's down 92% under the Biden administration, but with Trump coming in office, the fundamentals have never looked better. So everyone, without further ado, let's get straight into the news, the facts, and the data. Well, okay, everyone, look at this first story. US consumer borrowing drops on plunge in credit card balances. Now, why is this happening? Well, it's because the US consumer is in big, big trouble. They're not spending anymore. They've maxed out their credit cards. They know hard times are coming and they're tightening their belt. So total credit dropped 7.5 billion after a revised 17.3 billion gain in October. Because this is the theme we're going to be going over in today's video. The data is not trustworthy anymore. Look at this. They said there was a 17 billion gain and it's now negative 7.5 billion. Because this is what they do again and again and again. They'll put out a great headline to tell everyone, look, don't worry, the economy is going so strong, everything's fine. And then they'll quietly revise the data 3 to 6 months later. Now we can look at this chart. We can see here interest rates on credit cards are skyrocketing, and they're now around historic highs, some at 23%. Now this is why I think the markets and consumers are going to be in for a big shock in 2025. Fed officials deliver a blunt message to the stock market, which ignores it. So they're telling the stock market, look, we might have gotten away from ourselves. We might have caused a bit of a bubble in the stock market, which they definitely have. And they're saying, look, we may not even lower interest rates anymore. With the latest jobs data we got on Friday, which of course they'll probably just revise 6 months later, people are saying there could even be rate hikes this year in 2025. Because look at this. Blowout jobs report fuels Wall Street fear of lose-lose market. Hot data fuels market concern over Fed policy trajectory, and correlations rise in a sign of a macro-driven investing regime. So that's exactly right. They're saying that apparently there was 250,000 jobs created in December. This was double what they were estimating. And so now the markets are saying, well, maybe we won't get rate cuts in 2025. Maybe we'll get rate increases. And this shows you how the stock market is not built on fundamentals anymore. It's built on money printing and cheap debt. Because this should be good news. Okay, they're creating lots of jobs, which I don't think they are, but it should be good news. And that should mean that these consumers are going to start getting higher wages and they're going to start spending and the economy will grow. And that should be good for stocks. But no, the stocks only want cheap credit and free money. Because look at this chart here. Stocks and bonds suffer losses. Combined return of equities and treasuries is negative for a fifth week. Because we can see this next chart here, there is rising market inflation expectations, and investors have been betting on increasing price pressures. Because I think I know and you all know that inflation is not going away. Prices are still going up much more than they want you to believe. Because Friday's employment report is the latest in a string to show the US economy is firming and potential for price pressures increasing. A University of Michigan survey showed consumers' long-term inflation expectations rising to the highest level since 2008. Now, one of the top macroeconomic strategists has warned that bond sell-off exposes vulnerability in markets. The US Dow data underscores the solid US economy and global divergence, and higher yields in the US is exposing weakness around the world. And that's exactly what we're seeing. We're seeing this rising dollar going through the global economy like a wrecking ball, We can see this story here as the dollar jumps on unexpected hiring. This sends yields higher, and the Australian dollar is now at its weakest since April 2020. But it's not just the Australian dollar. The China boosts yuan support as dollar strength pressures Asia. And we're seeing this happen in country after country. We're seeing this happen in Japan. We're seeing this happening in Turkey. We're seeing this happen in Lebanon. We're seeing currencies around the world plummet because people are knowing that fiat currencies are failing. All fiat currencies created throughout history have failed. It's just that the US dollar is the strongest out of all the fiat currencies that will eventually fail. So everyone's flocking to that as a safe haven at the moment. But unfortunately, there's going to be big issues for the US because the California wildfires is going to go down, or already has gone down, as the worst wildfire in American history. We're seeing entire cities being absolutely leveled to the floor. And this is going to come at a big cost when the US government is already so indebted. Biden has come out and said that he will support 100% of the recovery efforts. The federal government is going to have to come in and bail out California. And this next story shows could be a $1 trillion hit for the US insuring industry. So look at this, everyone. California fires expose a $1 trillion hole in US home insurance. Because unlike many people may know, a lot of these insurance companies like State Farm pulled out of California before these fires happened because they saw how high the risk was. They also saw that the California governor, that the LA mayor was not doing anything to mitigate the risk of these fires. They were defunding the fire brigade by millions and millions of dollars. They closed their reservoir for reservations. They had no water in the reservoir at all. So the insurance companies were pulling out as fast as they could. So listen to this report. Nearly 500,000 Californians has turned to the state insurer of last resort, the FAIR plan, which has doubled in size over the past 5 years. And the date is exposed to nearly $450 billion in potential damage, a figure that has nearly tripled since 2020. But here's the big problem, and the question we have to ask ourselves: how much money does the state fair plan actually have? The neighborhoods in the path of the Palisades and other fires burning in this week among some of the hardest hit by insurers' defections in recent years. The 90272 postcode of the Pacific Palisades experienced 1,930 policy non-renewals between 2019 and 2024, or 28 out of every 100 policies. But here's the big problem, everyone. Pacific Palisades is also the state's 5th largest insurer of fair policies, with nearly $6 billion in exposure. But even a fraction of that amount would exceed the capabilities of FAIR, which last reported had about $700 million in cash. Now, additional damage can be passed on to private insurers, which could pass those costs immediately to their less risky customers. So that's exactly right, everyone. FAIR only has $700 million in cash to pay out these claims, not even close to the amount of damages it's going to cost. And another thing that a lot of the mainstream media is not saying is the FAIR plan only covers up to homes worth $3 million. So we're seeing these homes that are worth $5 to $10 million even. You're seeing homes worth hundreds of millions of dollars, and I know there's no sympathy, or people may not sympathize with those that may have lost their homes, but it still is very, very tragic. Whether you're wealthy or not, maybe a lot of their wealth was tied up in this home. Maybe that home was passed down for generation after generation. They weren't very cash rich, but maybe they were asset rich just simply because of this one home they had. A lot of these people are going to lose everything, and their insurance is not going to cover it. But here's another big thing, and you should go ahead and call your insurer right now, because 80% of Americans are actually underinsured. So private insurance plans aren't always enough to fully reimburse a homeowner, given rising rebuilding costs, especially after a widespread disaster. Professor Clean has suggested that 80% of Americans don't have enough home insurance. And that's exactly right, because they may insure you at the price of what it costs to build a home at the time you took out that insurance. If that was 10 years ago, well, the cost to build a home has doubled since then, or maybe even tripled since then. And here's another thing. If everybody in LA tries to rebuild at the same time, we're going to see building costs skyrocket. There simply won't be enough labor. They'll have lots of labor shortages to build these homes. They'll have a lot of supply shortages. We're going to see some people try to price gouge. We're already seeing this happen with rentals right now. I had reports from people in LA or LA realtors where there may be only one house for rent in that area and they're having bidding wars, people paying tens of thousands of dollars just to try to rent that one home. And guess what? California is one of the hardest places to build. They have so much bureaucracy, so much red tape. When it comes to building a home, it can take around 2 to 3 years to build in a typical building environment. But with such a crisis like this, with everyone trying to rebuild at the same time, some people saying to get back to where they were before, this could take decades. So everyone, you definitely need to pay attention, definitely need to prepare it right now by making sure you have a plan. If there's a natural disaster in your area, have a 72-hour kit, double check your insurance to make sure you have enough insurance that you really need, have an emergency fund in case a crisis like this happens, and have a plan B. Okay, if a crisis hits, where am I going to go in such a crisis? Now let's go into our next story. The United States of America is 1 week away from swearing in a president whose stated goal is to drill, baby drill, unlocking the nation's vast riches. In February 2021, right after Joe Biden took office, the market cap of Giant Mining, that's US ticker symbol BFGFF, was around 100 million. Now today, Giant Mining has a market cap of just 7 million after plummeting 93%. Now Giant Mining, again that stock ticker symbol BFGFF, is sponsoring today's video. And I want to show you why the same company that owns a copper, silver, gold project in the state of Nevada is 93% cheaper than in 2021, even after hitting its best ever drilling intercepts in September. Now on November 15th, a major bill passed the House of Representatives, and it is called the Crucial Mineral Consistency Act, and it will go to the Senate next. Crucial minerals are essential for the US economy and must ensure access to a reliable supply. Cisco Money, the sponsor of this legislation, explains that the goal is to fortify commodities, logistics domestically and include copper, electric steel, silicon, and silicon carbide on the crucial minerals list. Now, this vote highlights the copper's essential role in powering America's energy future. This is according to Copper Development Association CEO Adam Estelli. The legislation specifically ensures copper mine projects are eligible for the FAST-41 permitting process. Now, Giant Mining, ticker symbol BFGFF, owns a copper project in the world's #1 mining jurisdiction, Nevada, situation in the good old US of A. In the past 4 years, while the share price created 93%, management and the company's geologists have actually expanded the copper deposit, and this past December, Giant Mining hit their best ever drilling hole. Now, BHP, Billiton, and Rio Tinto, two of the largest copper producers in the world, are warning that copper supply cannot possibly meet the future demand from artificial intelligence and a construction renaissance in the US and China. Meanwhile, the share price of Giant Mining, whose flagship copper silver gold project in Nevada is called Majuba Hill, has depreciated from US $4.20 on January 13th, 2023 to only 16 cents today. Now, historic underground mines at Majuba Hill project produce copper, tin, and silver from the early 1900s to 1950s. This includes 2 million pounds of copper, 183 ounces of silver, 5,800 ounces of gold, and 21,000 pounds of tin. I'll say this again, and for all the factors falling below, one of the reasons that led me to be so bullish on Giant Mining. So the infrastructure is ready. They have access to roads, power supply, transportation, water supply, ore stockpiles, and processing space and a processing plant. So when you look at this, ask yourself one question. At 93% below its all-time high, with a market cap of 7.3 million compared with 100 million, with legislation that puts copper on top mined with an asset in Nevada, is Giant Mining worth conducting due diligence on? Now, the dollar is stronger today, except for any point other than 1985. Now, preliminary discussions within the Trump team shows they want to bring back to the United States, the people said, those include the defense industry supply chain through tariffs on steel, iron, aluminium, and copper. So you have the world's most impactful government signaling out copper as one of its biggest strategic moves. Now, copper was on the rise from below $2.50 to $4 in early 2021, and in 2025, the copper price is below $4. Now, the market cap of Giant Mining then was around 100 million, and today it is 7.5 million, the same exact copper, silver, gold project in Nevada. Now, only now the project is significantly more developed, and they just hit their highest grade hole to date, from surface to down to 218 feet. Surface high grade at Majuba with 74 feet of 2.6% copper and 30.1 grams per ton silver within 218 feet of 1.3% copper and 73.4 grams per ton silver. Now, with 1 week to go until Donald Trump's inauguration, the notion after 8 years of Obama and 4 years of Biden and policies that make it difficult to permit and mine in the United States won't be relaxed, and it's out of touch in my view. Therefore, when I combine the following pro-business administration, new minerals legislation to include copper as crucial, the looming supply shortage, and the fact that Giant Mining's US BFGFF project is down 93%, I'm very bullish. So go ahead and start doing your due diligence on Giant Mining today. But everyone, what do you think about all of this? Let me know down below. Thanks for watching. You're awesome. I'll see you all in the next video.